Hello and welcome to the Inside Stylist podcast. I'm Emma Morton-Turner and you're listening to episode 6, Talking Tax with John Falcon. So I'm really excited about this episode because it's the first of my Freestyling Friday podcasts. I used to do a Q&A session to the Facebook group in a Facebook Live, and people would send in questions ahead of time and I would do my best to answer them. But in the last few times I've done it, I've had an expert with me and it's gone down really well. So I'm really looking forward to sharing these podcasts, which are going to go out on the last Friday of each month. This episode is with John Falcon, who's the director of JF Financial. He's an accountant and we talk about everything to do with tax. People sent in questions ahead of time, so it's all to do with being freelance and what you can and can't claim for with expenses, doing your tax return, that sort of thing. And as a freelancer, it's quite handy to have someone, especially in your family, who can help you with that sort of thing. And John answers all of our questions. So in the first Freestyling Friday, I hope it's beneficial to you and you get lots of information from it. Enjoy the episode. This is my brother-in-law, John Falcon.
Hi.
And he is an accountant and understands what we guys do because, let's face it, most people don't really understand what it is that stylists and writers do because it's so niche. So I've sent lots of questions. I think most of you know that I've been sending out requests for questions, and I'm going to get John to just introduce what he does and talk through how he works and that sort of thing. John how long have you had your business for? How long have you been going for?
So 5 years as of pretty much today. So,
5 years, I think it was about 3.
Yeah.
So John is my sister's husband, and he obviously has been around me for longer than he's been married to my sister, and knows firsthand what it's like to be around stylists and what the work involves and how kind of crazy it is, and also John's helped me with my tax return quite a bit. So he really understands the whole expenses and things, but I mean, he's an accountant, so he understands anyway. But because he understands what we do, I thought he'd be really good to come on and just answer our questions. So I've got quite a few from previous posts for the last few days. So do you want to just explain the kind of things that you do and how you work?
Yeah, so I was an accountant working in businesses for about 12 years or so. And a lot of that time was working in creative businesses. So I kind of worked with a lot of freelancers in the different creative industries. So I started up my business about just over 5 years ago, with the initial aim to work with just a handful of bigger businesses. But then I had lots of kind of freelancers getting in touch and asking to do the tax return. So that ended up being the focus. And these days, there's 3 of us in the business full time. Me, my wife Shelley's sister. And Emma's sister.
Yeah.
And
Shelley, my sister.
Shelley, Emma's sister. And Rob, a guy who works for me up in Nottingham. And we just work with largely freelancers and contractors. So the kind of things you're asking me, hopefully, I will know about. If not, I'll just run out the door.
I think from looking at all the questions, I think John's not going to have any problems.
Yeah, hopefully not. But no worries. We'll follow up.
I'm just going to literally read out the questions. I think that's probably the best thing to do. How do accountants deal with stylists who have masses of receipts for random props? What do I need to know when I'm just starting out? So kind of if you've just been buying things, I'm not entirely sure what receipts they're for, whether they're like personal household receipts for when you're working from home or if they're actual props receipts. But do you need to know which
No, it doesn't matter. So what I would say is whether you're doing your own tax returns or whether you're getting an accountant to do them, the more organised you can be as you go along, not like a year later, the easier it's going to be either for you to do your tax and to analyse things, or the cheaper it's going to be for an accountant to do them. So when we work with clients, we don't do masses of bookkeeping. The clients will give information to us and we'll then go back and ask some questions. Whereas the old way of doing accounts might be someone would turn up with like a bin bag full of receipts and then the accountant would have to charge a fortune to work through them and do the tax return. So the more organised you can be, the better. So these days you can either use an online system, something like Free Agent, which Emma uses and the vast majority of our clients use, which is like an online system where you can log in and you can keep a track of your expenses. So if it's things that are going through your bank account directly, which we'll talk about bank accounts, you can explain what they're for. Or if it's things you're paying kind of out your own cash here and there, you can keep a track of those expenses. And if you want to be ultra organised, you can take a picture of the receipt, attach like a scan there. But the more organised you can be, keeping your receipts, ideally then kind of listing out what you're spending each month, what they're on, or putting them on a system like Free Agent, the better. Otherwise, you're going to get a year down the line. You've probably been there before.
I have been there.
Not these days.
I'm going to no, not now, but at the beginning, I'm just going to show you something that how I work. I haven't told John this. He's probably going to laugh.
Oh, this is good.
I've got one of these. It says tax receipts 2016, 2017, and it literally has, it's like a little concertina folder, and you put the different months of the year, and every time I have a receipt that is not work related, not client related, that I'm sending off on an invoice, I put it in this little concertina file, and then at the back I've made my own little tabs, and like one says magazine and food, one says petrol, one says stationery, one says train travel, so that at the end of the year I don't have to go through every month and see what I've spent where, what I have spent and when I spent it. I just, on my tax return, I will put all my travel through together for train travel, so I can just find all those receipts in one go. So that's quite a good way of keeping paper receipts under control. But all my receipts that I use for clients, if I'm buying props and things, they all stay with that invoice. I keep hold of them all. But what I do is, which I think is just really for my own benefit, but as much as for my clients, I lay them all out on a piece of like all my receipts out on a piece of A4 paper, and then I scan them. Like I take a photo on an app that is a scanner. I'll link that through in the comments underneath of the app I use. But you can take a photo. It turns your photo into a PDF. And sometimes, I mean, the last shoot I did, it was a week-long shoot. I had 12 pages of receipts, but then I keep the receipts, and then the client I can send them off to the client, and they can see what I've spent my money on. So that's kind of how I deal with receipts. But keeping things online is, well, I find it much easier. But yeah, it's not for everyone, I know.
Yeah, I mean, obviously the importance of that is not just to do your tax well. You're not going to forget to charge a client something. And also, hopefully, you can keep a tab of how much you're earning. So hopefully you're putting your tax aside as you go along. I'm
going to talk about that in a minute as well, how I do that. Next question. I do freelance work in Italy and pay local tax. Will I also pay UK tax or get a rebate for the tax I have paid?
Okay, so I'm going to assume this is someone who's a UK resident,
yes,
and they go out to work in Italy, I don't know, a couple of months over the course of a year at most.
Yeah.
So if you're a UK resident, you pay tax in the UK. I don't know this for sure because I don't know all the double taxation treaties, but each country will have a double taxation treaty with the UK, and that will deal with how you don't pay tax 2 times. So basically on your tax return, when you fill it in, you'll fill in the amount of tax that's been held at source by Italy, and you'll get it back there. So it should wash out. If you're not, where it can get more complicated is if you're maybe 6 months in the UK, 6 months in Italy. So let's assume that's not the case.
No, that's not the case with this person.
So
I think he's hired to do a job, and then the whole team go out, the crew go out, do a shoot, and then come back. Or he's hired to go out there as the stylist and then shoot on his own. Yeah,
I mean, we deal mostly with limited companies, so I'm not 100% sure how it works these days, but it used to work that if you went to a country, you could give them proof of your UK residency, and that would stop them withholding the tax. They may not do that with sole traders these days, I'm not sure. But, worth asking.
Okay, I think we've covered this. I'm going to read it, but I'm going to cover it anyway because I think I know what John will say. I'm hoping John deals in paperwork as well as digi receipts, etc. I'll never manage to go totally paper free. I think we've kind of covered that. I think the way to do things is to kind of keep a digital record, but like I said, if you just keep your receipts together and kind of put them in an organised fashion, you can kind of keep on top of them rather than just putting them all together in one big heap. I think if you know what you can charge for and put, when you put your elements through on your tax form, you know that some will be for travel, some will be household payments. So if you can just group them, then that will help you keep control of your paperwork side of things. So I hope that helps.
It's probably something worth pointing out. It's not now, but at some point HMRC have got intentions to roll out something called Making Tax Digital, which will mean all your information has to be submitted electronically, like your income and your cost. So try and get ahead of the game now. Free Agent, other systems, Excel, whatever it is, just be organised and it'll be well worth it.
How does that relate to receipts then? Do you have to do a digital copy of the receipt?
So the receipt's just for your benefit, of the backup to prove what the expense is for, but actually submitting to HMRC, when you do your tax return, you'll actually have to, once a quarter is what they're proposing, submit your total income and expenses, potentially by category, travel, software, that kind of stuff. So if you're feeding that into a system as you go along, it's not going to be such a big headache.
Yeah.
But that's further down the line.
Good. Right. This is quite a big area, and I don't think we can go into absolute specifics, but just to kind of maybe talk about it in a general sense in terms of styling, or if you're a writer who works just from home. Would love a roundup of all the things you can claim back. For example, rent bills. I have an office at home. Also, items you can claim for when working on a job, lunch, beverages, travel, etc. How far does this go? Also, if you claim your mileage back, can you claim the VAT back from the receipts? Probably all very simple and obvious answers, but I'm a real newbie. So I think we might talk about travel and cars and things separately, because I know that's quite complicated. But in terms of things so if you're on a shoot and you buy lunch, is that covered? Okay,
so it's all driven by travel. So HMRC will look at your travel, and they will decide. Well, they'll say whether it's a permanent place of work you're going to, or whether it's a temporary place of work. So if you're travelling 2 days a week, 1 day a week, consistently to the same client, same office, and you have been doing for, let's say, a year, 2 years, that becomes like a pattern of somewhere you're actually going to do your work permanently. At that point, you can't claim the travel going to that office, and you can't claim any food around that, any lunch costs, any coffees. However, if you're going out to shoots, presumably you're travelling to lots of different locations all the time. If that's the case, then you can claim your travel to those locations, and as long as you can claim your travel, you can claim subsistence, and that means lunch and like coffees, like just for you, not for other freelancers and clients.
Right. So this is something that I didn't know until last year. So I actually have a folder for Dr. Pepper now, because I buy Dr. Pepper when I'm going to press launches, or if I'm going to a shoot. If I'm going to something work related, I now can claim that back, and I think I'll probably claim back more for Dr. Pepper than I do for petrol. But so if you are buying lunch for a shoot, actually, on the shoot, it's unlikely that you would be paying for lunch on a shoot, but say you do, can you claim that as a work expense?
Lunch for the other people on the shoot? You'd be able to put that through. I guess where the line becomes a bit tricky is whether it's entertaining clients or not. Presumably this is actually just part of the shoot costs though. So I'd just treat like any other shoot cost, like buying in props or whatever. Right. And put that through.
And then let's talk a little bit about if you work from home, because can you explain how that works? How you can, because when I first did my tax return, and John went through it with me to make sure I'd done everything correctly. I didn't realise the way that works clearly, so I think if John explains that, but it saved me a lot of money.
Yeah, no worries. Yeah, so what I'll say is I'll send a little PDF thing or something for Emma to put on the group afterwards. They'll explain this, so don't worry if you don't follow. So obviously these days a lot of people work from home. So there's two ways you can treat those costs. HMRC have these simplified rates, but they're very low. Like they work out to be a couple £100 a year, which in reality, particularly if you're living around London, is obviously not reflective of your real running costs. So the other thing you can do is you can claim a fair proportion of your home running costs. And what you would do there is you would look at how many rooms your house has got, okay, and you'd exclude bathrooms, hallways and kitchens. So you're including bedrooms, you're including lounges, you're including dining rooms, yeah? So let's say you've got 3 bedrooms, lounge, dining room, so that's 5 bedrooms. You can then claim, and then let's say that you've got 1 room that is your office, okay? So that's 1 room out of 5. Now, that means you can claim 1/5 of your running costs of the household. Now, usually you wouldn't claim 100% of 1 room, though. You'd say like 80% of the room is office, because you're going to have some personal bits around. So let's say you're doing 80% of 1/5 of your running costs, if that makes sense. Then what you've got to do is toss up your running costs. So that will be either your rent or your mortgage interest. So really important, you don't include your mortgage repayments in total. It's just the interest element. And then you can include other costs in that. So council tax, any service charges, electricity, gas, cleaning bills if you're paying a cleaner. So if you add up all those things, do 1/5 of it in our example, and then do 80% of that, that'll come out with a number. Now there's actually a couple of complications beyond that. So I'm not going to go into that, but I'll put a link, or I'll give Emma some advice to put out on that. Is that all right?
Yeah.
But yeah, you will usually find that, I mean, it's going to depend on how big your house is or flat, how much you're paying to run that place. But we see things, anything from a couple £100 up to 5-6 grand Like, it can vary massively. So it's well worth working through those calculations.
Yeah, that's what I didn't know. The first year I didn't claim for that, and the second I did, and it was like it saved me like £1,000 in tax or something. That was a massive win, I think. But that's also the same for things like your phone and like your landline phone, your broadband, your mobile phone. It's always kind of the percentage of what you use it for work you claim for. You can't claim the 100% just because you use your phone at home. You use it privately as well.
That's right, yeah. I mean, normally with mobile phones, I'd say do 50% because it's usual that you're using it for both, isn't it? Same with internet. They tend to be the main things that are shared, really. So yeah, I would just put that through. That's fine. So obviously, when you're keeping a track of your costs, just put 50% of your mobile through if that's what you're going to use as a percentage.
Yeah, there's something that I approached John on a couple of years ago. I was doing some videos for Procter & Gamble, and I had to. I just went out and bought new clothes because I thought I need to look fresh and nice. And I was like, well, it's for work. I can claim for that, can't I? But I can't, can I?
No. So clothing is a real pain, actually. The only clothing you can claim for is uniforms. So that would be if you've got your logo on a shirt. I should have got JF Financial logo on this.
I don't think any of us wear uniforms.
So if you've got a logo of your business on a jumper or something, that's fine. You could claim that. If it's a costume, so let's say, I don't know, you're a clown. I don't know if people are clowns these days.
You never know.
If there's any clowns out there, clearly that's an outfit you're not going to generally wear day to day. Hopefully.
Sorry, interrupting you, but if you had to dress up as a clown for a shoot, that's claimable. But
that sounds horrific.
Yeah, it does. It does sound horrific.
If you had to dress up as a clown for that would be claimable. Yeah, I've got image. That's horrible. But yes, you can claim that.
So
you can't claim basically everyday wear.
Right.
Even if you're like, right, I had to buy this suit to go to this meeting for my business, and if I didn't go to this meeting, it would have impacted my business. HMRC don't care, because it could be used for everyday wear.
Right. So if you're going to want a nice handbag for looking smart, and that's not working, is it?
No, we get asked this all the time, and clients unfortunately get a bit frustrated. But the problem is there's no grey area. There's like tax cases over the years that have just come clearly down on the side that you can't claim it. So
no clothes.
It's not worth it. The amount you're going to be saving anyway.
The next question is about car and petrol and mileage. Now, John explained this to me, and I can't even remember what he said because it was a few years ago now. But it's not complicated, but it's quite cut and dry how you do it. But I tend to charge my clients for the mileage that I do, but then that mileage is. I can't then claim that back on my VAT. Do you want to explain how cars work?
Yeah, so what you charge your clients nothing to do with what you claim. So you need to draw a line down that there. So you've got two different ways you can claim car running costs. And once you've chosen which method you use, you've got to stick with that method for how long you've got that car. So you can only change it when you buy a new car. So you can either claim for business mileage, so any journeys you're doing that are allowable. So the example we did before about a location that wasn't allowable, you couldn't claim that mileage. But if you're doing mileage to all your shoots and that, add up your mileage, and you can claim 45 pence per mile for the first 10,000 miles, and then it's 25 pence per mile thereafter. That's the first method you could do, and that's the simplest way, because all you've really got to do there is keep a mileage log. So maybe on Excel or something, or if you use Free Agent, you can actually add the journeys in. But on Excel, you just keep a log of each journey you do, why you're doing it, like, Bromley, London Bridge, shoot X, 20 miles, whatever it is. And then at the end, then you can just work out the total mileage and work that out on your tax return then. The other way you can do it, which is more complicated, you basically put through a proportion of your running costs of your car. Now, to do that, what you're really meant to do is at the start of the tax year take a
mileage,
odometer, whatever it is,
the mileage,
and ideally take a little phone, little picture of that. At the end of the tax year, do the same. So you've got your total mileage, and then using the mileage log we talked about before, you'd then know what percentage of your mileage was work related. Let's say it was 50%. You could then put through 50% of your running costs. So that would be 50% of your petrol, 50% of MOT, car servicing, repairs, tyres, blah, blah, blah.
Yeah.
The actual cost of the car itself is way more complicated, and it's something called capital allowances. I'm not even going to go into it. I'm going to send you a guide.
This really blew my mind, because I did replace my car when I was freelance for about a year, and Oh my God, it's so complicated.
It is.
I would suggest people get in touch with an accountant to help with that if you want to. I just wrote it off and just said, I'm not even going to look at the cost of the car and putting that through. I do the second of what John's saying. I work out how much mileage I've done. I keep a log of how much mileage I've done for shoots. I mean, usually I claim the petrol back from the client, so I don't put that into my accounts section. You can't kind of claim it twice. But the whole car thing is really complicated because it depends on the type of car you've got, how eco-friendly it is. If it's really crap, which mine is, I think if my car was £4,000, I think I could claim back like £200 worth of the car, but only the percentage. So it would have been like 50% of £200. It just was too complicated. It wasn't worth going there. I was just like,
and even if you do use that method where you claim a proportion of your running costs, how you charge your cost onto your client is totally up to you. You know, that's to be, but usually people will use the mileage method then.
Yeah.
Say like 500 miles at 45p because that's clear to the client, but they're not tied to each other.
Yeah, that I never get that they're not tied to each other. Right, these questions came in later yesterday. Can I claim the travel to jobs, and if so, do I have to top up receipts on the date of the job? I don't really understand what that means. I think when you travel to jobs, if you're driving, you kind of can do the two forms of that we just talked about there with the car. But if you're travelling by train to a job,
just keep your train ticket. I mean, a lot of people these days will have Oyster cards that will just top up. So ideally what you'll do there, you can log into your Oyster account and just print out a download of your transactions, so you know how much. I mean, even better, you have one Oyster card for work and one for personal. And then you have the Oyster card that's for work automatically go out your business account, and then your bookkeeping's being done for you. That's the aim. Yeah.
Can I claim for the travel cost for propping to my own test shoots? Well, your own test shoots are still work, aren't they?
Yeah, that's fine. Yeah.
I think a test shoot is the same as doing a client shoot. So yes, you're travelling to work. You're not doing something for personal benefit. It is work. You're leading to experience and making your portfolio case look even bigger and fuller. I think we've talked about we've talked about using rooms and how you claim back for that. But an extension on this is, can I claim the furniture and products which I need for the studio room? So if you're putting something in your office or a studio that you're working from. Yeah,
as long as your office is being used vast majority for work, so let's say 80% plus for work, then anything, chairs, desks, lighting, blinds, painting, put all that through. If it was 50-50, then just put half through.
Okay, we've talked about how to do the rooms and we've talked about how to do the bills, so I think that's all covered.
Yeah.
Payments on other cards. If I purchase some furniture for the studio or fuel for the car and my boyfriend paid for that with his card, and I will give him the money the next month, can I still claim the money?
Yeah, that's fine. Just keep a copy of the receipt so you've got proof of what it was for.
It's the receipt that's important, not who paid for it.
I mean, obviously,
really.
if they'd never paid for it, then I can see HMRC,
if you were ever checked, they might.
But ideally what you do, let's say you are using a spreadsheet just to keep a track of your costs, for example.
He said spreadsheet.
Google
it's like
Sheets.
saying Christmas.
It's or whatever system you're using, have a separate folder or a separate tab on Excel, whatever it is, for costs paid in other ways, and then you can just put a little note next to it, can't you? Paid boyfriend on X date for this. The key things have improved. Really, it does. So. Yeah, I mean, we're probably going to get onto this, but the more you can put through a single bank account for your business, the easier it's going to be. Yeah, because you're not going to miss out on stuff. It makes your bookkeeping a lot easier.
Next question is, props for test shoots. Can I claim kitchenware or foods which I buy in order to use for a test shoot?
Yeah, so this one's a bit of a quirky one. I've never really thought about this, but let's say you're buying in a Magimix blender or something. I don't know, something that is not cheap.
KitchenAid, £300 KitchenAid.
Exactly, that you're going to use for your shoot, but you're then presumably going to keep that for many years afterwards. I wouldn't put that through because, you're getting so much personal. You get the vast majority of the use is personal, isn't it?
But if it was food,
that's presumably perishable. So I wouldn't put through wine and whiskey and that kind of stuff that's clearly going to be drunk by you. But if you've got food that you need to do it for your shoot, and you're either going to chuck it away or eat it. I mean, how's HMRC going to know if you've ate it or not?
Yeah,
they're not at that level yet.
Well, I think if anyone's been on a shoot like me and there's been food involved, I don't think anyone wants to eat it at the end of the day. It looks a little bit.
Yeah, I think that would be fine. But if you put them through like oysters and champagne, probably not.
Yeah, they might catch on.
Yeah.
If I've purchased items for props from a country outside the UK, can I claim?
Yeah, it makes no difference where they've been bought.
Yeah, I've done quite a lot of this. A lot of my website stuff, my blogs and things like that. I use American companies, so I would pay like a monthly fee to have more storage or something, and it always comes in dollars. I mean, I do use Free Agent, and when I put in my expenses, I just literally change it from pounds to dollars, and then it works out what the exchange rate and everything is for me. It just keeps it calculated. So if you're not on Free Agent and you've got a receipt and it says you spent $50, what do? Do you just kind of work out what the exchange rate is?
Yeah, just go on any of them, ONA.com, whatever, just FX.com, whatever, just go on one of them. I mean, HMRC technically have exchange rates, but you know, the difference is going to be pounds. So you just use like one of the big exchange rate websites to do it. Do a screenshot of it maybe, just so you've got proof of what you do.
Yeah. Just going to say, as a note, I've had a little issue online recently, and I've started saving everything into my iCloud account. If you are doing screenshots of things that are important to keep, just open up an iCloud folder that is just for those sheets, because if your computer dies or your daughter drops your iPad or spills tea on your laptop, then it doesn't matter. It doesn't matter if you've lost stuff that's sitting on your laptop and it can't be retrieved because it's in the iCloud. I think that's probably an obvious thing, but I've lost quite a lot of stuff recently that actually I'm gutted about. So everything is saved to the iCloud now. I know you probably know that, but right. When I complete my first tax form for my first year and don't have much to declare, do you advise me to pay an accountant, or is it quite easy to complete it myself?
You can probably do it yourself, in all honesty. It depends how complicated your affairs are. I'm assuming you've got employment income, you've finished employment and you've started freelance work. If that's the case, then first of all, make sure you're registered for self-assessment. So HMRC will send you a 10-digit tax reference called the UTR. Make sure you've got access to HMRC online. So do this well ahead of the tax deadline date. So
which is if you do it online, it's the 31st of January.
Yeah.
So if you need to do it for this year, do it now, because it gets really busy and it's really hard to get through on the HMRC website. Even if you want to do a live chat or phone someone, it's almost impossible once you get to November, December. So just do it well in advance.
Yeah, if you just Google register self-employment HMRC online, if you go through that process, you'll both register and you'll get your online account in one go. So that's the easiest way to do it.
And there's prompts as well, isn't there? If you get stuck, there are like little I buttons above each section to explain what you are putting in, what information you're putting in that box. So they do make it quite easy. Well, they make it as easy as they can, really, I suppose. Yeah,
I mean, the vast majority of stuff on the tax return you won't need to fill in, because there's all sorts of weird stuff on there.
Yeah.
But employment income, if you've left employment during the year, I'm making an assumption here, you'll have a P45, and that'll show you how much you've earned during that period of the tax year and how much tax was deducted. You'll enter those two figures in the employment section, and in the self-employment section, you'll enter in your income from self-employment and any costs that are allowable. And then it should work it out for you. So I would say if you're not crazily, not a huge amount of income and costs, you can do it yourself. You know, if things get a bit bigger and more complicated, that's where you might save tax by going with an accountant. But give it a go. That's what I'd say.
Yeah. I got a question quite last minute about cash, and if you buy props with cash and if you use PayPal to pay for things. With PayPal, you can print off it's like an invoice, really. You can print it off and that is your receipt. So that's quite easy to kind of have proof of what you've bought. Cash, we were just talking about this earlier. Even if you're paying for something with cash, you still need to get a receipt. If you're doing cash in hand, if you don't have a receipt, you can't claim for it, basically.
Well, look, if you've got a handful of things that are missing, still stick it through. I would say, always ask for a receipt. You know, if they can't give you one for the odd couple of things, maybe you could write down just a note of what it was for. So at least you've got some kind of documentation. It's not ideal, but really just ask for a receipt each time. You know, worst, you can always take a picture, can't you, these days? It's so easy. I'll take a picture of receipts all the time now.
I think if you, I know a lot of us, like boot sale, because you can find really interesting things at boot sale. So if you're buying something for 10 quid at a boot sale and you need it for work, it's a prop that goes in your prop garage, it's not for home.
Yeah.
That's on your own back.
It's on your own back. Why not do a selfie with the car boot sale behind? Boom. There you go.
£10.
PayPal. I hate PayPal. I use PayPal so much, but I hate it as well. I don't like, because when you try and get like statements from PayPal, it's got about 4 lines for every transaction when you go in there.
Oh, see, when I buy stuff as a prop, I just click on that transaction and print that off, and it's a whole page just for that one thing.
Yeah.
You probably have money coming in all the time from PayPal.
No, well, yeah, but seriously, the amount of like, because you'll have like the PayPal income, even worse if you're buying something in a foreign currency, like American software.
Yeah.
Then it'll convert it, then it'll have PayPal charges and all this. So, ideally track this as you go along, because if you get to the end of the year...
So
and
each
doing
item,
exports,
you mean?
Yeah.
Yeah, so what I do is I have a folder, and for each month, and every time I send an invoice out, and I have all the invoices at the front of the folder, and when it's been paid, I put it into the correct month. And then anything I buy, so if I buy, say, software or something through PayPal, I print off that receipt for that one thing, and then I put that into the correct month where I just spent it. So it's always there, and at the end of the year, I go through and check that I've put it all through as an expense. I actually add it onto my free agent as I go, so I don't have to do that all at the end of the year. Right, next question. Tea, milk, part of a lot. Oh yeah, so if you buy tea and milk, but you want to claim it back as part, and you've bought, like, you've done your weekly shop, but only the tea and milk is on the receipt for work, how do you claim that?
Yeah, so again, take a picture. I mean, I'm going electronic here, but take a picture. Highlight the items
well, you can
first.
just draw around it,
Yeah,
can't you,
highlight
and keep
them,
that receipt.
stick it in your file, take a picture, whatever it is, and just claim the items. As long as you've got proof of that purchase, it's fine. Doesn't matter that it's mixed up.
The chances are you're not going to need to keep the receipt for the other items if you've done it in like a weekly shop. So you can just keep it and then highlight it and say work or something, so you've got the physical receipt. Right, we're moving on to bank accounts now. There was quite a few questions about bank accounts. These might repeat, so I'll try and whiz through them because I don't want to keep everyone for too long. But right, I might be wrong, but I don't think you can get a business bank account without being a limited company.
You are wrong.
You are wrong.
You are wrong. So, yes.
Do you need a business bank account?
No, you don't. Well, okay. If your bank tells you that they think you're running a business, they can insist that you open a business bank account. That's perfectly within their rights. However, my default advice tends to be open a second current account. Tell them you just need a second current account because you want to manage your personal finances, in a more organised way, and then run everything through that second bank account. It doesn't have to be a business one. Like I say, the bank can insist on that. I've never seen it. I think if you were like, I don't know, an Etsy store that had loads of stock going through and all this sort of, maybe you've got hundreds and hundreds of transactions each month, I can see the bank sort of seeing that, having a flag on it. If you're a freelancer that's got a couple of items of income coming in and maybe 10 or 20
millions going out,
I would literally just open a second current account. Now, and the benefit of that, the real benefit is your bookkeeping is going to be way simpler. Everything's in one place. Okay, so when it comes to doing your tax return, essentially it's being done. Most of it's being done for you because it's in the bank account. It's the income and the cost, and you can export that into a certain format. Or if you're using Free Agent, it can be automatically fed into Free Agent if you set it up that way, or you can manually import it. The other thing is if HMRC, if you're unlucky enough to have a tax inspection, then in the first instance, you're just going to give them your bank account for the business. And they're not going to be bothered with all the stuff that's going through your personal account, which, I'm not saying you're hiding anything, but it's just the less you can give them, the better, because it's just going to lead to less questions coming up. They might still want to look at the current account, but at least you're starting off with that. So no, you don't need a business one. Just open a second current account.
This question is pretty much the same.
Actually, no, let's go back to that. Yeah,
okay.
Because my answer there was assuming you're a sole trader. So
okay.
Yeah?
So if you're a limited company,
so when you're a sole trader, you and the business are exactly the same thing. There's no legal separation between what they are. Okay, so if you do something wrong in the shoot and you get sued, Emma, if you've not got insurance, they're coming after you. If you're a limited company, that's a totally separate legal entity to you as a person, okay? And because it's a separate legal entity, it has to have its own business bank account. Otherwise, it'd be like two separate limited companies using the same bank account.
So if they came to sue me, they could only take money from the business bank account. They couldn't take it from my personal. Yeah,
well, that's one of the advantages of limited company. You have this kind of veil that's there between it. As long as you've run the company legally, you're not doing anything dodgy, and you've not taken too much money out of the business that you shouldn't have, then you can't get sued.
Right. So basically, if you're a sole trader, you don't need one, but if you're a limited company, you really should.
Yeah, you really do. Yeah. Some people try and get away with it. It's just not worth it, because if HMRC look into things, you're in a whole heap of trouble there.
Right. Okay. well, you just answered that one. Can you can you use one bank account for both? But actually, we've just said that you should have two. Okay. I would like to know if I'm registered as a limited company, giving myself a salary each month. I believe this is a dividend. Then, so I need to set myself up as an employee of the business as well, or alternatively carry out a self-assessment.
Okay, there's a whole muddle of things there. Okay, so when you're a limited company, the typical way that you extract money out of that company is you'll take a low salary, and anything above that you'll take as a dividend. They're two separate things. Okay, I'm not going to go into crazy detail here, but when let's say you're a freelancer running your own limited company, just to keep things simple, you will be both the director of your company and you'll be a shareholder of the company. The shareholders own the company, and they appoint a director to run the company. Okay, now being a director allows you to be paid a salary. Being a shareholder allows you to be paid a dividend. Right. But that's how they're separated out. Now, for tax efficiency, you take a low salary up to a certain level, and anything above that you take as dividends. Very important that they're done separately. To be able to take a low salary, yes, you need to have a payroll scheme for your company, and you need to have monthly payroll being processed. You're not actually an employee; you're an officer of the company. So if you're an employee, you'd have an employment contract and all this kind of nonsense, and you'd have to potentially pay pensions and all this kind of stuff. But by taking a low salary, you're being tax efficient, but you do need a payroll scheme set up. Self-assessment. Oh my God. Yeah, it gets a lot more complicated when you're a company. We have an excellent tax planning book for limited companies on our website. Oh yeah, I'll get that. That was a nice plug. John's written 2 books that are really, really good. But we'll talk about them at the end, and we'll put links in so people can see. But it is more complicated. But I'm just going to put this in quickly, just so you know, just to kind of round it off. When it comes to your personal tax return, if you're running a company, the things that go on your personal tax return, i.e. self-assessment, is your salary and your dividends. Okay, nothing to do with your company income. Like, it's not linked to it. It's how much salary and dividends you're taking out of your company.
If you're limited, do you really need an accountant to do your books?
Yes, yeah. These days,
I think that is. I'm not limited. I'm sole trader, but it sounds so complicated, and I think it's the general running of things that we wanted to talk about here, because I think these things are so, you need to know what you're doing, and if you're a limited company, then I think from what John's saying now, it just makes sense to get an accountant, pay them however much it is, just to get them to do the finer details and make sure that. I think what I'm trying to say is, I think if you pay an accountant a couple of £100, you're going to save £400 from the £200 you've had to spend. You know, I think it's cost efficient is what I'm trying to say.
I mean, I don't know if this is the right time or not. I mean, again, I'll put a link up, but the benefit of a limited company over sole trader is probably not something that's been asked, is it?
No.
But that's something to be. Right, if you're looking at just tax, there's no real benefits these days. Okay, there might be in a few years' times when the tax gap's open again, and there was a few years ago. But right now, there's not enough of a tax saving. If you're looking for other benefits, like the security of not being sued, I don't know how likely that is in your field, but some businesses it is sensitive. Or if you want to appear to be a little bit of a bigger business, or actually for tax efficiency, if you're married and your spouse potentially can get salary and dividends, a limited company is worth it. But if you're a simple freelancer or whatever, don't do it for tax. Anyway, I'll send a guide for that.
Yeah. I'm just going to bring in here, I think I might have mentioned this before. I can't remember if I've mentioned it to you guys or if I've talked about it on Insta stories. But I wasn't in debt when I went freelance. I'm not, I'm not risk averse. I will jump without having any safety net. But when I wanted to get out of debt and kind of get on top of my money, I read a book by a guy called Dave Ramsey, which is called Total Money Makeover. And it was just explaining how to stop spending money that you haven't got. And it's about debt management. He's this American guy. He does a radio show and it's a podcast and it's brilliant. If you feel like you're spending too much money, you listen to this podcast. You've listened to it, haven't you?
Yeah, it's good.
And you don't want to. You'll kind of go in a shop and go, oh no, I better not spend that. So that book is really good. But there's another book by. Have you read Profit First? No. So there's a book called Profit First by Mike Michalowicz. I will definitely put that in the notes because I can't even. I've written his name here and I don't even know if I've spelled it right. He wrote this book that is all about which little pockets you need to put your money in, and it's completely changed my life because I'm a real envelope person. I need money for this and it goes in that envelope, and I need money for that, it goes in that envelope. But what he does is he says you need to work and earn profit. So he says you take your salary, you take out a percentage that you decide, and that is your profit. and that goes into an account that you call the vault. So that money is spent on you. It's never used for work. I mean, I think I started at 5% and I've upped it to 10% now. I use that money, well, first thing I used it for was to buy windows for my house, and then I used it to go on holiday. It's money that you never use to pay for props or pay for tax or anything like that. But he really goes into how to separate your money out and make sure that you take your tax money and put it aside. And I think as freelancers, it's really easy to say, well, I've got this tax bill, I've got these invoices I need to pay for this, that, and the other for this shoot. I'll just use the money I've put aside for tax. And this book's really made me very clear about that is not the way to get on top of things. And the moment I started doing the process in this book, I had the money sitting there ready when the tax bill came. But it's just a really good book, and I think it's really interesting. Might be worth checking out. So I thought I'd just mention it to you guys. Also,
I like the title.
He's
Profit
got
first.
Profit
Can't
First.
go wrong with Profit
His
First.
first book was called The Pumpkin Patch Plan. It's all about how this guy who had these little seeds, but for growing show-stopping pumpkins, and he could sell these seeds for $200 each because he had the best pumpkin. Anyway, that's another. The other one was a toilet entrepreneur or something. He's a bit mad, but it's just that book really hit a nerve. It was really good. Right. VAT. We're moving on to VAT.
Oh, no.
Right. Now, because I'm sole trader, I don't deal with VAT at all. And when I see the questions come up in the Facebook group, I have to say, I just have no idea how it works.
Yeah,
can you just explain who is VAT registered? Why would you be VAT registered?
So it doesn't matter if you're a sole trader or a limited company when it comes to VAT registration. There's a threshold which is currently £85,000, okay? If your turnover, like how much you're billing, goes above 85 grand over a rolling 12 months basis, so it's always rolling every month, you're always rolling looking at your turnover. If it goes above £85,000, that's when you've got to register for VAT. So the vast majority of sole traders tend to be below that, so you don't need to VAT register, okay? You can still voluntarily VAT register.
And why would you do that?
You'd usually only do that if you had a lot of VAT on your costs to claim back. Okay.
Yeah, I think this is why a lot of people who are in the group are, I mean, unless you're earning over £85,000, I would love it if you were.
Yeah.
I'll just take a fraction of that, thanks. So I think that's probably,
Yeah.
I'm going to go through these questions because I think otherwise we might go round and round.
Yeah.
But so the criteria is basically, if you're earning 85,000 or more, you have to be VAT registered, and you don't have to be earning that to be VAT registered,
exactly.
because there are other benefits to doing it. And I think that's probably what's happened. Accountants have said to people, well, actually, you're spending this money, you could claim more VAT, and that's why. And once you're VAT registered, that's it, you're VAT registered, aren't you? You can't go back to sole trader, is that right?
So sole trader's nothing to do with VAT registration. And remember, you've gone again. You can deregister for VAT as long as you fall below the threshold.
Right.
Okay. So you could register for a year and deregister. Well, you wouldn't be able to deregister if you were like at 90k turnover.
Right. Okay. Right. I understand.
Yeah. So you can come out again. It's a bit messy. You don't really want to go in for a short time and come out. But yeah, mostly people would do it to claim back VAT on costs. But you've also got to balance up the additional bookkeeping, because you're going to have to keep a track of which costs have got VAT on when it comes to doing your VAT return.
Right.
If you do a quarterly VAT return usually. So there's definitely more bookkeeping involved, more admin, both on the accountant's end and on the client end. So, you know, you've got to balance that out between saving a couple £100 of VAT and actually...
And your time.
Yeah, well, exactly, yeah.
Can you explain the difference between flat rate and normal?
Yeah, I can. So the reason a lot of people... So I'm just making a note because I'm going to send another article. You're going to have loads of articles following this.
It's going to be weekend reading, guys.
Yeah, bedtime reading. The reason a lot of people are or used to be VAT registered, even though they were below the threshold, was because of something called the flat rate scheme. Now, the flat rate scheme basically said, let's say over a year you've charged 40 grand of income, and on top of that you've added 20% VAT, okay? So 8 grand of VAT. So you charge the clients 48 grand. They've paid you that 48 grand. Normally that 8 grand would go to HMRC through the VAT return, less any VAT you've claimed on your costs. How the flat rate scheme worked is you take that 8 grand of VAT and you'd only pay a percentage of that to HMRC, and the trade-off would be you don't claim VAT on your costs. So it was a simplified VAT scheme, but for years, like loads of businesses were making a lot of profit out of being on that flat rate scheme. From April, that largely got closed down for service business and freelancers. So these days, if you're a freelancer in the kind of group you are with Emma, you shouldn't be on the flat rate scheme, in all honesty, unless you need to be VAT registered and you want to keep it simple. You're not really making profit. But I'm going to send you a guide on that.
Can you explain about recording things as a disbursement versus an expense?
Okay.
What is a disbursement?
Yeah, okay, fine. So let's say that I am a web developer. I'm just coming up with that. And let's say I'm going to visit a client at their offices, and they've said that they'll pay for my travel expense. They'll refund me for that. That is not a disbursement because that's actually my cost. It's me travelling. Okay. So when I come to invoicing them, if I'm VAT registered, I'll be charging VAT on my fees and that travel fee. It doesn't matter that there's no VAT on the travel cost. There's a complete line drawn between the VAT on the cost and what you have to charge. Okay, so that's not a disbursement because it's my cost. However, a disbursement is if you're buying something on behalf of a client and you've been given authority by the client to buy it, the client owns it, you're not making a margin on it, and there's all sorts of other rules, so we'll put a link up to Emma on this. If you meet all those criteria, then it's called a disbursement. And what that means is you don't charge VAT on that to the client. The client instead will claim back VAT if there is anything on that receipt. So let's say, as that web developer example, a client had asked me to buy some software for them. Okay, by me charging that onto them, I wouldn't need to charge them VAT because it's their software, they own it. I've just made the transaction to buy it on their behalf, and I'm not making a markup on it. So that would be a disbursement. So they're the two, but there's some really picky rules as to what counts as a disbursement. And I know in your game with props being bought for the client, you're really going to have to look through those rules and make sure all the criteria is met. But I would think, and you can check with your accountant, because I think there's a question further down where someone's accountant has advised them they have to add VAT on.
Yeah. Shall I read that question?
Yeah, to go through it.
So, I just about got my head around the whole adding 20% to my props cost for VAT until a client last week started quibbling and said that they are happy to pay my fees plus 20% VAT, but not VAT on the props as they hadn't budgeted for this. Said surely they would just claim back the VAT and it's not real money, sort of. But they are insistent. Accountants tell me that I must add VAT onto my costs so they won't budge. I will have to charge 20% less for props than add the VAT on to create a fee for props that they wish to pay. And says this won't cost me anything, but I guess it means I won't get my little VAT bonus on top. Still don't understand any of this whatsoever and think I'm going to have to give in and do it this way. Have you encountered this any before? This is one of the questions that's been on Facebook recently.
Yeah.
So basically the client has said, I'll pay you the VAT on your fees, but not for the props.
Okay. So I guess first of all, I'm not sure why the client would have an issue, because if they're VAT registered, they claim it back and it won't be hitting their budget.
Yeah.
But perhaps this is someone who doesn't understand that. That's usually the case. However, I would ask your accountant. I would say, look, and I'd explain in some detail what these prop costs are, like the whole process, how you buy them, whether you charge anything beyond the actual purchase price to them, and actually who owns the prop at the end. Ask the accountant if it meets the criteria of a disbursement, because if it does, you don't have to charge VAT. I would think if you're buying props on behalf of the clients,
they would be keeping everything.
If they're keeping it all and you're not making any profit on it, it sounds to me like a disbursement. But like I say, and I'll give you a link, but it's just going to be to HMRC's guidance as to what a disbursement is.
That might be useful, because I think with what we buy so many different things, don't we? So it could be food, it could be plants, it could be furniture, it could be cushions, it could be absolutely anything. So the HMRC will have clearer guidelines about what is a disbursement and what is not. Yeah.
Just make sure if it is a disbursement, okay, you're not charging that to the client. You're also not claiming that back on the cost. Okay, so don't do that. Otherwise, you're then up, which you shouldn't be.
And if you've got like £1,000 worth of props, you have to go through that whole list and see which one is
got VAT on it.
VAT on it.
Well, first of all, you need a VAT receipt that shows the VAT. But yeah, you might be buying from places that aren't even VAT registered. So make sure you go through that. Don't assume everything's got VAT on. But yeah, don't charge your client no VAT and then also claim the VAT back, or you'll be in a heap of trouble then.
Right. this I'm going to just say this, you can tell me if this is the same as what you just said. If you're VAT registered, do you have to charge 20% onto the whole invoice, including props and expenses, even for services that already have VAT added to them?
Yeah, so there's no link between whether there's a VAT on a cost and then whether you charge VAT or not. There's absolutely no link between those two things. So for example, the example of the web developer where the client's paying his travel expenses, the travel won't have VAT on. If you buy a train ticket, there won't be any VAT on that. But when he charges it onto the client, he does have to charge VAT on that because it's part of his services, it's his cost. And then obviously if it's a disbursement, i.e. computer software for the client, in that example, he doesn't need to charge VAT.
So with regards to props, that depends on the disbursement.
It's going to depend on
so it's not
are you
just
making a markup?
dry.
No, you're going to have to look through the criteria of what's a disbursement. Okay, but like I say, it sounds to me that if you're not making a margin on it, and the client's clearly giving you authority to go off and spend this budget on props, and they own the prop, it sounds to me like a disbursement.
So you don't add.
So you wouldn't add VAT on
right.
it, and also you wouldn't claim VAT back on your costs either. Yeah.
Right.
So don't do both. Yeah, it is complicated. I mean, keep it really simple. The person that's asked this question, explain what prop costs you have and how you charge them onto the client, and ask the accountant if they qualify as a disbursement, and then they, from that point, because they've probably just assumed it's not a disbursement because they don't know anything beyond, what they're assuming.
Do you think if she goes to her accountant and says, right, this is what I do for a living and these are the usual things I buy for props, can you tell me what is and isn't a disbursement? Is it quite easy to just...
No, she'll need to explain
per product.
Well, just give a couple of examples. So I've bought this bookcase for this shoot. It's the client's to own afterwards, and I'm simply charging onto the client exactly what it cost me. If you tell him that, I think it'll be disbursement. But I'll send you a link to the HMRC guidance because there's about 7 or 8 things you need to meet the criteria on.
Right. Sorry, going to be lots of reading, Joe.
Yeah.
Right, kind of gone over that. Okay, I think this might have been answered, but I'm going to just read it out anyway, just to make sure I've covered everything. Right, I'm paying for a set build for a job myself and recharging costs to a client. The client agreed to the set build fee of £260, which was excluding VAT. I have paid the set builder now and paid them £340-ish. So whatever this is, their fees plus VAT, and they added on top themselves. If I put this full amount on my invoice rather than just the £260 net, then add my 20% VAT fees on top, I'm effectively overcharging my client by 20%. Or as they will also claim back the VAT I charge. Oh, sorry, I'm not reading this very clearly.
I've got the gist.
So basically, if your set builder is charging you a fee and then adds VAT on, you pay that whole fee. Do you then charge them on your invoice? Do you add your 20% VAT on top?
Got you. Honestly, it will depend on what you've agreed with the client. I'm assuming the agreement with the client is that there should not really be any profit on this, your end. So in which case you would charge, so if it was 260 plus VAT, you would charge the client 260 plus VAT. So that overall, there's no profit on that to you. Again, this is ignoring disbursements though. This is assuming it sounds to me like a disbursement, that to me.
Right. But I think disbursements are the thing that make everything really complicated.
Yeah.
Really complicated. Sorry, I hope that's not annoying and not very helpful. Right, that's all the VAT questions. I don't know if anyone's got any questions or has any comments that they want to add. You can just add them in underneath and we can answer them if you need us to. Paying on account.
Yeah.
Can you explain this a bit in real English? Now, I said to John earlier that when I said, remember what I was like when I very first went freelance and had to do my tax return for the first time? Think of it like that. Tell me in really easy, slow terms.
I'll try.
Speak pure Emma.
Okay. So when you're employed, you have your tax deducted every month and they pay you after tax, yeah? So you don't need to worry about your tax. When you're self-employed, that doesn't happen. But payments on account are a way of kind of helping that happen a little bit. So,
sorry, just before we go any further, I just want to say that there's quite a lot of assistants who've said, I'm new, what do I do? Payment on account is when you do your tax return, you get 2 amounts that you have to pay. One you have to pay in January and one you have to pay in July. But the January one is split into 2.
Yeah.
And one of these is called paying on account. And that's what we're talking about, just in case anyone doesn't know what that is.
So let's think of a really simple example of someone who started freelancing in the 16-17 tax year. So the 16-17 tax year is 6th of April 16 to 5th of April 17. Okay, the deadline for that tax return is 31 January 18. Okay, so it's the 31 January after the end of the tax year. So 31 January 18, they'll have to pay their tax for that 16-17 year, and on top of that, they'll also pay 50% again of the tax, which is an on-account payment for the 17-18 tax
year. So you have to pay that. You
have to pay it. Okay. Now, if that wasn't your first year and you've been doing it for previous years, although you're paying that on-account payment for 17-18, there'd also be an adjustment to take off tax you'd already paid on account before that.
Yeah.
So you're never out of pocket. Okay, so the simpler way to think about it is the earliest point in which you're paying tax for a tax year is 31 January, which is like 10/12 of the way through the year. Okay, so if you're putting money aside every month, like you should be, you're never going to get in a position where payments on account are a problem. And actually, if you end up in a position where you're quite consistent year to year, which I know you might not be, but if you do, the amount you pay every 31 January and then 31 July is going to get quite stable.
So if you have a really good year, the next year might bump up.
Right. So if you have a bumper year, and then when it comes to payments on account, you think, well, that's a bit unfair. I'm paying loads of tax, but I know this next year that I'm in now is lower. You can actually reduce your payments on account on the tax return, okay? Because otherwise you're going to be paying way too much tax in advance. Yeah. If you do that and then it turns out your tax actually was really big, HMRC are going to charge you a load of interest and then come after some payments on account earlier. So don't do that. Just do it if you've genuinely...
Just pay what they say, unless it's going to be really, like say you stop working, you're I don't know, you go off on maternity leave and you just don't work for 6 months of the year or something.
Well, even if you let's say you had 40k profits in one year and then the next year was, I'm just saying 30k.
40k profit.
Yeah, that 10k difference is, you're getting on for like 2 or 3 grand of tax and NI difference. So actually I would reduce it then. But if it's like, not as wildly different as that, then I'd just leave it with what HMRC say. But yeah, it is. So 31 Jan, 31 July, the 2 times you pay in tax. Okay.
Another thing for people who, quite a few assistants have said, I'm quite new, what should I do? You pretty much pay 20% tax on what you earn. So when you're looking to put money aside from your bill, you should put at least 20% aside, right? Is that right?
Kind of. I can go into more detail if you want.
Yeah, but also you pay national insurance, and that is, I think it's 9%. Is it 9%?
Yeah.
Class...
I'll go through the details.
All right. So I put 30% of my salary, so my fees, aside into a separate account that I have for tax every invoice, so that when my tax bill comes, it's there. But yeah. I mean, it's never that much, because once you put your expenses through and stuff, it does come down. But if I put 30% aside, the money is there and it's waiting. Yeah. Usually.
So I'll briefly talk through how it works, because some people might have different situations. Yeah. So income tax, your first, this year that we're in now, your first £11,500 of income is tax-free. That's called the personal allowance. So any income, let's say all you had was self-employed profits. If that was, let's say, 11 grand, there's no tax to pay. Okay. Once you go over the 11.5 grand, you pay 20% tax until you hit the higher tax band, which is 45 grand this year. Over 45 grand, higher rates kick in. You then got national insurance. So when you're self-employed, you've got something called Class 4 national insurance, which, despite its name, isn't really national insurance, because it doesn't go towards any kind of state pension or benefits. It's essentially a tax. Class 4 national insurance, any profits over roughly 8 grand, you pay 9% NI. Okay, so if let's say your self-employed profits are 20 grand, you're not going to be at 20%. You're going to be lower than that, aren't you? But
Yeah. See, I think if I basically when I was saying I bought my car, I was really panicking, so I put 40% aside, and then when I broke my car, I had money in the bank account ready to buy a car and pay my tax. So I just do it. This is just how I do it. I'm not saying you should do it like that, but this is just how I do it, so I know I'm covered, that if I put 30% aside, I will always have enough to cover whatever my tax bill is. Yeah. But I know it will always be a little bit less.
Yeah, that's good. I like the safe.
Go to
Paris. That's good, yeah. Also, if you have a student loan balance, you'll also have repayments of that through your tax return. If your earnings are above
14 grand or something.
No, it's like 17 grand. Oh, right. There's 2 different types of
14
student
grand
loan
when
now.
I finished uni.
It's like between 17 and 21 grand. You'll pay 9% of anything above that. So that could kick you in the teeth if you've forgotten about that.
Yeah.
Yeah, that's it. Put money aside.
Yeah. keep your money in separate accounts and don't tell them. I know someone has had problems setting up a business account because they said, I think it was that there was some problem with it, but if you are setting up an account that's separate for your business, you don't have to tell them it's for business, because then they'll charge you a monthly fee and charge you for checks and all that sort of stuff. So just open a separate account for money to go in and into and out of. I actually bank with this. I bank with First Direct, and this was who was being difficult, and I've had nothing but brilliant experiences with them. But yeah, I don't know why they were so difficult.
I've never heard of any bank, like, once it's set up, like, making an issue out of it. But I think if you just say it's for personal budgeting, that's it. I've
got so many bank accounts. If I tell you what I do, and I know it's because of this Profit First book, and I do know it sounds absolutely bonkers, but I have one account that is for my vault, for my happy money. I have one account for my tax. I have one account for my business where my invoices are paid into and all my expenses go out of. And then I've got all my personal accounts. So, and also, because I don't want to accidentally... You know, when you have like a banking in internet banking and you can see all your like balances, I don't want to see that in my tax account, because it'll be like, oh, there's £2,000 sitting in that account. It's like, yeah, because you've got to pay your bill in 2 minutes. So I put it into a Metro bank account, which is such a nightmare to get into, because it's like a 14-digit number. Then you've got to remember a password and have a memorable number, and it's just so complicated that I never want to go into it. I have to change my password practically every time I need to go into it. So I just don't look at it until I need to pay my bill. So that's a brilliant way of keeping your tax money aside and super central. That's all our questions. It's gone on quite long. I'm sorry for keeping you so long.
That's all right.
So I should just tell you that John's got a really great blog that every week. How is it every?
It's once kind
a week,
of once to twice a week.
Quite a lot, yeah. And it's like sometimes it's relevant to me, sometimes it's not. It's really good. It's in English that I can understand. He mentioned you've got 2 books. Do you want to talk about your books quickly?
Yeah, so I would say go to the website and
what is it?
It says jf-financial.co.uk. And if you click on blog, there's like hundreds of articles on there now that are just free. So go and read them, and get some free advice, hopefully. On almost all of those articles, there's a little opt-in to give you a free calculator. So if you go on one of the self-employed ones, you'll get a free tax calculator that'll tell you how much tax and NI you're going to need to put aside. So opt into that. You'll then be on the mailing list. So that means that whenever there's a new blog, I'll be updating you about that. But it also means I'll occasionally sell you, or try and sell you, our ebooks, because we've got one for limited companies and one for sole traders.
I really appreciate you sticking around, and thank you for coming.
Thanks for having me.
To play my
I
little
hope
office.
There's been some value out there, people.
Yeah, no, it's been great. So thank you, John.
Thank you.
All right, I'll see you all soon. I will get all those links typed up, and I'll put them in the comments below. And any questions, just send them through, and I'll try and get them answered nice and quickly. Have a great weekend, everyone. See you soon. Bye. Thanks for listening to the Inside Stylist podcast. You can find John at jf-financial.com. And all the links from today's episode are in the show notes, which is on insidestylist.com/John Falcon. So John mentioned Free Agent, which is the accounting package he mainly uses with his clients, but also I've been using for about 4 years now, and it's fantastic. And Inside Stylist can get 10% off a yearly subscription to that. I'll put a link in the show notes to this, but there's also an accounting resources page on the website that you can have a look at lots of details about accountancy and some recommendations from other stylists in the group. That's it for this episode. I hope you found it really useful. When I do Freestyling Friday episodes in the future, I'll be putting a request out for questions. I've got quite a few recorded for the next few months, but when that happens, I will let you know. Keep posted on the Instagram page and the Facebook pages, and I'll be sharing the topic then. So as I've mentioned before, we love talking interiors, and if there's anyone you'd like to hear from, then please let us know. We really want to make sure we're giving you what you want. Anyway, until next time, bye for now.